Up next, let's turn our attention over to the markets. Joining us this week is Kyle Bumsted. Here's our conversation. We're going to talk about the grain markets first, then transition to livestock. It wasn't long ago December corn crossed the $5 mark. There was some optimism we could go higher at that point, but that is not what we've seen. Corn market, what happened, Kyle?
Well, that's exactly what happened. We went to the very top end of the range. We hit a bunch of buy stops, and boom, we turned and went lower. There just wasn't enough buying here to sustain it here. It's kind of the wrong time of year to get a sustained rally of any real meaning. So what it was a classic head fake, and here we were a couple sessions later, about 30, 35 cents off those highs. I still think there's a little bit of hope for the corn market here. Once we pass that 50% harvested, guys get it tucked away in the bin. The basis market's kind of stagnated here, and so have the spreads. So what I don't like to see here is early on in the week, we did cross that Dees July spread. It did go to 30 cents carry, which tells me that commercials and end users are getting a little bit more comfortable here with the size of crop that we have, as well as our demand situation going down the river. River levels have come up just a little bit, but not enough to get a major amount of shipping done. Ethanol still is good, or the ethanol grind is still good. The margins are still there. But as far as the cattle situation goes, I think that less numbers kind of takes part of that out of the feed and residual category here for the end user part.
You bring up demand when we're talking about corn, but on transition to soybeans, because it seems like demand is often talked about with soybeans right now. The exports seem to be a concern. Is that something you're watching too on the bean front?
Yeah, exports are definitely a concern here. We have seen a few exports here to Mexico. We saw some exports to Mexico early in the week. But the big mover has been in the meal market. The big headlines here that have been running around the trade have been about Argentina running out of bean meal here. And so I think that some of the end users have come to the USA to get the coverage here in the meal market, and that's what's kept the firm bid underneath the soybean complex.
All right, well, let's round out our conversation on the grains by bringing up wheat. A lot of our viewers might be happy if you'd be bullish for wheat, but I don't think that's the case this week, is it?
Not the case this week for sure. New contract lows. Bull markets don't make new contract lows. That's a bear market in wheat, and this kind of started here back in late July, early August, when the CME group started talking about bringing in VSR, which widens out the amount of carry from month to month in those contracts. And we've just simply got too much wheat or a demand situation. We may not have we may not have an abundance of wheat here in the USA, but there's plenty of wheat here in the world. So we're just not on the top of the list here as far as the export market goes there.
All right, want to use the rest of our time with you, Kyle, talk about the cattle markets in particular. We like to do so every time we have you on Market Journal. Feeder cattle, we'll begin there. Safe to say they've fallen off their highs at this point?
Yes, they have. Late last week, we saw some ugly moves here as far as the direct trade. As far as feeder cattle goes, that index on Monday afternoon was quoted down $3.17. And then Tuesday afternoon, it made a small rebound up about 70 cents. But we did see some good sales here early in the week in the north. The southern plains are still struggling here. They've had a lot of cold, rainy weather move through there, and that's really a real back to buying down there, as well as their numbers. Their numbers are way off earlier in the week, so that's going to be tough to get a good feeder cattle market established on the cash side. Plus, we're entering into somewhat of a holiday type mode here. We get through the second week of November. There's a lot of the big sales. They just won't have feeder cattle sales here. They might have a special one in December, but most of them are off the books here until after the first of the year. So we're really starting to wind down the feeder cattle sales as far as the big numbers until we get after the first of the year.
Live cattle also not looking too pretty in the charts, but not quite as bad as feeder cattle. Your thoughts there?
Not quite as bad, but I was a little bit disappointed. Late last week, we thought we saw a higher cash trade, and I thought last week's cash trade was going to actually end the week higher, but it was actually lower. We traded quite a few cattle a week ago early in the week at 182 in Kansas and Texas. Even though we traded some 185 and 186 in Kansas and Texas in the southern plains here, that still wasn't enough to bring the average up. In the north last week, we traded a lot of 185 to 186, and I thought that we'd trade closer to 188. Now, I still have some hope here for this week. Once we've kind of shut the screens off that the cash trade's higher, but from a technical standpoint here, we failed to fill the gap here at 184.42 here in this December lat cattle contract, and that's a little bit of a concern to me. If we could get up there and gap over it, it would look really good, but it just doesn't seem like we've got the buyers yet.
I want to make sure we get a viewer question in here. You're kind of answering it between, but I'll have you answer it directly here, Kyle. The viewer question read something like this: when it comes to the live and feeder cattle, is it safe to say the highs in both markets are behind us, or perhaps is there a story that could develop that could bring us back up to those prices?
Well, there's always a story that could develop to bring us back up to those prices, but from a chart standpoint, it does look like a high has been posted. A longer term type high has been posted the way it looks on the charts. Now, historically, we do see a cash high being printed here in the live cattle side of things here towards the end of the year. Historically, December does sometimes mark that cash high. Most of the time marks that cash high historically. But from a chart standpoint, I think there's enough going on in the world. There's a little bit of uneasiness. We've seen non-commercial liquidation. So it's going to take a really big story because the whole market complex knows we're going to be short on numbers. We've known that for a year. And with this last cattle and feed report, it just pushed it out another 6 months. So yeah, I think it was a catalyst here for these funds to take some money off the table. They've been riding this train up for a long time, and they're the ones that have been feeding this thing or pushing it higher. So they took some money off the table. It does appear that a longer term high has been put in.